Hello everyone, how are you doing? You are welcome to video 14. So quickly, as you can see to the upper left of my screen, today we are going to be talking about introduction to market trend, introduction to market range, and the importance of having a market range. All right, so number one, first thing we're going to be looking at is introduction to a market trend. Remember on the last call, I I explained to you guys smart money and I gave you guys the checklist, right? That's in video 13. Then I said we were going to be looking at each of these checklists. And like after the call, the next video 14, 15, 16 will be all about the checklist. Right. So yes. So the first thing we're going to be talking about is introduction to market trend. All right. And then after that, we'll look at introduction to market range. And then the importance of having a market range. So is it important to be able to market your range? You will answer that. You should be able to answer that at the end of this training. So I just want to continue quickly. I want to show you something which I didn't show you yesterday while I was talking about smart money. If we come to Wikipedia, okay, quickly, and we type in Forex. All right, so I was actually going through the recording yesterday, the recording I did yesterday. I was going through it today, and then where in this area where I typed Forex, I saw something below this foreign exchange market. It says Forex candles. Right, remember yesterday I was at the question I asked you on the call, that is in video 13. I asked you a question that is the Forex market manipulated, or do people actually control this financial market, right? And then we were able to come out with um answers that yes, people actually do control the market, right? So in this area now, under Wikipedia, when you type Forex, you're going to say Forex candle, right? So what do we mean by Forex candle, right? So it says here that the Forex candle, also known as the Forex probe, is a 2013 financial scandal that involves the revelation, the subsequent investigation that banks colluded for at least a decade to manipulate exchange rates on the Forex market for their own financial gain. See it now? So the market regulators in Asia, Switzerland, the United Kingdom, and the United States began to investigate the 4.7 trillion per day. That's $4.7 trillion. As a then, the total money in circulation, market cap, Forex markets, every day in circulation was at 4.7 trillion, right? For now, we is about 7 trillion and above, right? So yes, and then after Bloomberg News reported in June 2013 that currency dealers said they had been front running client orders and rigging the foreign exchange benchmark. So this is just telling us that these guys out there, they actually manipulate the market in their favor. So when we say is the Forex market controlled, definitely these people are manipulating, or is the Forex market manipulated? Yes, these people manipulate price in order to go, to just make money out of it, right? And this is proof that truly the Forex market is being manipulated. As you can see, there is the Forex scandal and I mean, it's still happening, right? So if we come to this area that says the investigation, we're going to start reading from up here. It says, at the center of the investigation, we had the transcript of electronic chat rooms in which senior currency traders discussed with their competitors at the other banks the types and volume of the trade they plan to take, they plan to place. This is big traders. It's like they have a chat room where they're all discussing, giving out, okay, this is the amount of position I want to buy on this asset, something like that, right? And then we can read further. It says the chat rooms add names such as the cartel, the bandits club, one team, one dream, the mafia, right? The discussions in the chat rooms were interspersed with jokes about manipulating the Forex market and repeated references to alcohol, drugs, and women. Right, exactly. So they talk about alcohol, drugs, and women. All right, so regulators were particularly focusing in one small exclusive chat room, which was variously called the cartel or the mafia. The chat rooms was used by some of the most influential traders in London, and membership in the chat rooms was highly sought after. Right, so you can go on like further. Okay, let's continue to read down before we just quickly said the chat rooms sought for. Among the cartel members, we have Richard Archer, a former Royal Bank of Scotland senior trader. So Richard Archer went from Royal Bank of Scotland to JP Morgan. Remember in video 13, I showed you the top 10 currency traders, and JP Morgan is the biggest. Seen it now? And then I showed you some other ones like you can see this bank also. Then I showed you HSBC, right? Then the Bank of England. These are all smart money, institutional companies, institutional traders. And now we've seen that there was an investigation, and if we come to on that effect and then the fine, I mean, they all had to pay quite a large amount of money, right? Because if we come on the fines here, it says on 12 November, that's my birthday, right? It's 12 November 2014, the United Kingdom's Financial Conduct Authority, that's FCA, imposed fines totaling to $1.7 billion on 5 banks for failing to control business practices in their G10 spot foreign exchange trading operations, specifically Citibank. $358 million. HSBC was fined $346 million. JP Morgan, $352 million fine. RBS, $344 million fine. UBS, $371 million fine. Right, see it, and then we have quite a number of orders. Right, so I just wanted to show you this quickly before we go into the market trend and market range. That is the Forex market manipulated. You can see it yourself. Yes, it's not me just coming out without fact, without a backup, without showing you real deal that this is actually real. Right, so truly, truly, the market is manipulated, and these guys will not stop. So if they can earn so much money just to pay a little fine, I think they will do it over and over again. So if I'm earning quite a very big amount of money, and then you tell me to come and pay a little fine, I will pay it, and then still go do about still do it again. Right? So I mean, it's something that will not stop. I don't think it's gonna stop. Right. So just have it at the back of your mind that we are trading against big players in the market, like very, very big players. They have crazy amount of money. Money is so big that they can push price, they can manipulate the forex market. We do not stand a chance. That is the truth. We do not stand a chance. Even if you have $1 million in your account, you're joking. Okay, so just know that. I mean, even if you have $15 million, right? Yes. So definitely. And I had one of my mentors then was teaching us high frequency trading. Um, what was his name? Matthew Taylor, right? Matthew Taylor was an HFX trader with Higham Academy. Very, very amazing trader, right? And then we all saw when Matthew hit about $15 million in his account. And still, Matt is still taking losses. He still do take losses, even though he had $15 million in his account. So I was saying, so even if you have $15 million, you still can push market. So, and we either have little less or more or less than that, definitely we do not even stand a chance. So that's it. All right. So that is this just a continuation of what I was talking about yesterday. So I can just delete this now, and then we can move to what we have for today, right? So today we are going to be looking at introduction to market trend. Right. So what do I mean by market trend? What do I mean by market trend? Remember, in the checklist, I gave you 5 checklists. Number 1 was the trend of the market. Number 2 was the range of the market. Number 3 was the fee, right? And number 4 was the liquidity. And number 5 was the institutional candle, Right. So the first thing is the market trend. What do I mean by the market trend? So let's just uh, let me make this the normal color. Okay, I'm coming. Just take this back to let's put it at 16. No, let's make it 20. All right. So what do I mean by market trend? So market trend simply means the structure of the market. Okay, so market trend means the structure of the market. So if the first thing in the checklist is for you to be able to determine the trend of the market. So what I'm trying to say in essence is that the first thing you want to look at for is the market structure. That's it. The first thing you want to look at for is the market structure. And if you remember, we've talked about market structure already, right? In the previous recordings, one of the videos before this, where we talked about market structure. And then I told you that there were three basic types of market structure, if you remember, right? Then I told you that we have number one, we have the uptrending market. So let's do a quick recap now. Okay, number one, like there are three types of market structure. Right, number one is the uptrending market. Number two, the downtrending market. And number three is the consolidation market. Yeah, so you remember, right? Discuss this, the uptrending market, the downtrending market, and the consolidation market. When we talk about the uptrending market, this is a situation where price is going to the upside. So an uptrending market can be characterized as we have the high, the low, and the higher high. Do you remember this? The higher high, then we have the higher low, then we have the higher high, we have the higher low, and we have the higher high. So this is an uptrending market, right? So if you need to refresh your memory, just go back to the video where I talked about market structure. So I believe is in the video is going to pop up now. What video this is going to pop up now? So you're going to see it now, right? So this is it. Go back to it and watch it, okay? In case so you can have a refreshed understanding, right? So if in case you've forgotten, you can go back to watch it, and it's gonna help you understand all of these things. But I don't want to believe you've forgotten already, right? So we have three main types of market structure, right? The uptrending market, the downtrending market, and the consolidation market. So the very first thing you want to be able to spot, your very first thing before you even take a trade is what is the trend of the market. Okay, and then we have the uptrending market like I explained in the video, and aside from that we have the downtrending market. Okay, that's the market creating lower lows and lower highs and lower lows and lower highs and lower lows. And then the third type of market structure is the consolidation market. If you remember, the market is going in between the support and the resistance, right? So these are the three types of market structure that we have: the uptrending market, the downtrending market, and the consolidation market condition. Right. So the very first thing you want to be able to spot is the trend. What is the trend of the market? Because this already has solved 50% of your issue. You knowing that you are buying in a bullish market and you're selling in a bearish market. So if price of an asset is bullish, I want to be buying. If the price of an asset is bearish, I want to be looking for sales. That's it, right? So an uptrending market, the downtrending market, and the consolidation market. Now, aside from knowing the uptrending market and the downtrending market, you also need this, you need to know what the trend of the market is so you can be able to spot and draw your range correctly. So after attending to checklist number one, which is what is the trend of the market. Remember the 5 checklists we have. The checklist, right? Number one is the trend. Number two is the range. Number three is the Fib. That's the Fibonacci levels, right? And then number four is the liquidity. And number five is the institutional candle. See it now? Number five is the institutional candle. Now, the first thing is the trend. Trend simply means the structure of the market. And I have taught you what the structure is, higher highs and higher lows. So you know it now, right? So we come here and say, we can mark this now as good. We know this. We've been able to answer the trend of the market. Then you having the understanding and being able to spot what trend you're in, that is going to give you an advantage in order to be able to answer checklist number two, which brings us to this area, introduction to market range. Now, a market range can only be spotted if you've been able to get your market structure clearly. Because without you being able to tell you what market you're in, you might draw the range wrongly, and therefore you can have loss. You can have a loss on your trade if you do not plan it very well. In as much as even though we plan all our trades well, we still take losses. It's normal. But then this having this understanding will just help you to eliminate some losses, like not getting on some trades that are just going to go for the stop loss because you are not getting in at the right place. So that brings us to the second thing we're going to be talking about, introduction to a market range. Introduction to a market range. What do I mean by a market range? So let me pull up, let me draw some things for you. Okay, so we'll come here now and then say introduction to a market range. See it now? Definitely. So now, introduction to a market range. What is a range? So a range helps us to identify our trading areas. Just gonna make it that simple for you. The range helps us to identify our trade areas because I'm not going to be looking at every area to buy. I'm not going to be looking at every swing point, swing high and swing low to take a trade. So I want to be specific. So the range is going to help me to be specific that, okay, Tony, look for trade ideas within this area. Are you getting it now? Because as soon as you've been able to spot the range, you can't eliminate your focus. Like just take your mind off anything outside that range. You're not looking for trade ideas outside that range anymore. Your trade idea is going to be within the trading range. Seeing it now? So we have two types of range. Okay, we have the range at the top and then we have the range at the bottom. What am I trying to say now? If in a bullish market, let's put this now as the uptrending market here. Okay, we have this uptrending market. All right, uptrending market. And then we know that in an uptrending market, the price is going to give us what? A higher high and a higher low. So let's even start with just this one now. Let's start with this high, this low. Okay. And then this new high. So are you feeling me now? We have this high. So let's annotate on it now. We have this low here. Okay. So just going to make this just like we do it then, right? In the market structure, we have this as the low and we have this as the high. Okay, that's good, right? And then remember in the market structure video, I taught you again, if you've forgotten, please go back to the video and watch it again. All right, because everything you're going to be learning, everything you're going to be learning from me is all connected. You cannot leave one and then go for another. They are all connected and interrelated. They are all intertwined. Let me use that word. So make sure you have a good understanding. If you've forgotten anything as regards the market structure video, go back to it and watch it even before coming to this video. Right? Remember, in an uptrending market, I told you this was the low, we have the high, and we call this, what did we call this? What did we call this area here? I'm going to leave you to answer that. Higher low, right? Exactly. So we call this the higher low, and we call this area here the what? The higher high. Exactly. And then I told you, I gave you reasons as to why this is the higher low, and I gave you reasons as to why this is the higher high. I'm not going to say it on this call. If you want to know, go back and watch market structure video. Right. So now we know that according to the definition, we said in an alternate market, price should continue to break the previous high and should respect the previous higher low. You see it now? Now I gave you that definition, then we're bringing it into use now because we're going to use this to be able to identify our range. We said in an uptrending market, price should respect the higher low. That means the higher low now serves as the highest point of invalidation for a trade setup. Because in the definition, we said an uptrending market should respect the previous higher low, the most recent previous higher low. And what do we mean by respect? Price should not close below the previous higher low. If price does that, we now have a break of structure. Are you seeing it now? So price should respect. The word respect that means price should close above and it should respect the higher low. So therefore, this higher low area now becomes our highest level of invalidation. Big shout out to Jiggy for that. I remember I learned it from him. So this becomes our highest point of invalidation. Exactly. This becomes our highest point of invalidation for the trade setup. So if you're buying, the best place to put your stop loss is going to be where? At the higher low. Why? Because according to the definition, in an uptrending market, price should not get to the higher low before it continues to go up. So what we're saying in essence is that price should and can sell down, but should not get to the higher low, find some kind of support before it gets to the higher low, and then it should take off from there, and price should go all the way to the upside. This is what we said when we talked about market structure, right? Exactly. So if you've forgotten, go and watch the video again. That's what we said. So now, if that is the case, price should not get to the higher low. Therefore, this higher low is going to be our highest point of invalidation. What that means is the best place to put your stop loss. Those of you that find it hard, like, oh, what is it saying? Okay, best place to put your stop loss. That's what I'm saying. That's what I mean by highest point of invalidation. Okay, so now this is an uptrending market. Now let's bring in the range. Now, remember I said a range helps us to focus our mind at a particular area where we want to be looking for buying or selling opportunities. Now that this is a bullish market, we want to be looking for buying opportunities. Where can I start to look for buying opportunities? Where is my entry going to be? At what area is my entry going to be at? How do I know where I should start looking for entries? The understanding of market range is definitely going to help you because it has helped me, right? And then where do we look at the range? Where do we put the range now? The range can be found at the swing high and the most recent swing low. That is the most recent swing high and the most recent swing low. That is the area where we are going to be putting our range. I talked about swing point in market structure also. If you've forgotten, go back and watch it. So I talked about swing areas. So the range, we have two types of range. We have the top range and we have the down range. So quickly, let me bring that up also. So there are two types. of market range. Number one, top range. Number two, down range. Definitely. Exactly. Okay. Exactly. So now, and this top range can be found at the swing high, the most recent swing high, and then the down range is found at the most recent swing low. So what I'm saying in essence is this higher low here becomes our down range. And then this top range, this higher high here becomes our most recent top range. So you can just type on it or create a template just like I've done. And then I just have this as the top range and I have this as my down range. What this means is that I am looking for buying opportunity in between from this high to this area. Inside this area, this is where I'm going to be planning all my trades. This is where I'm going to plan my entry. It is here I'm going to find where my stop loss is going to be. And then I'm going to find where my first target is going to be at 1 to 3 risk to reward. Remember, I taught you risk to reward. Your first target should be at a 3 to 1 risk. So 3 reward to risk of 1. That is it. You don't need to have any reason why your TP should be there. Whatever your stop loss is, your stop loss is 3 times that is going to be your first take profit. Okay, then you can extend to additional TP areas, but TP1 should be at 1 to 3 risks to reward. Okay, so it is inside this area now. I am going to be looking for what? My buying opportunity. Because the range has helped me because I understand the range now. The ranges are the most recent high and the most recent low. Anywhere in between the area now is where I'm going to be looking for my buying opportunity. That's it, because I know that in a bullish market, price is going to come down again and then price is going to go up again. So now I want to remember, I told you in the market structure video, the best place to buy is at the higher low. I don't know if you remember that. So the higher low is always the best place to buy. That's it. This is the best place to buy. This is where I want to be buying in a bullish market because I'm catching the very low, just like we did for NASDAQ, right? Catching the very low and then price is going all the way to the upside. I'm going to make more money. I'm going to make more pips and I'm going to be more relaxed. That's it. And then how do I know that? Because I've been able to draw my range. So I know the range has already given me an area where I'm to be looking for these things. Because if I draw the range wrongly and I put the down range here, what I'm trying to say is all this area now, including this ILO, I'm still looking for buying opportunity. So if you draw the range wrongly, you can tend to miss out on trades. You can even take losses at times. So you need to be able to spot the range well after spotting the trend. So if the trend is bullish, you know price is creating higher highs and higher lows and higher highs and higher lows, right? Then the next thing you want to see is, okay, price has given me a new higher high, just like we have in this situation, in this case here. So this situation now, price is giving us a new higher high. Now, the top range and the down range are drawn at the most recent swing point, which is the most recent higher high and the most recent higher low, because this now is a new higher low in this area. So now where is the new top range going to be? The new top range is going to be at the most recent higher high, and the new down range is going to be at the most recent higher low. So now I'm not looking for anything below this higher low again now for any buying opportunity. My buying opportunity now has moved from this area. Now I'm looking for anywhere inside this area. You see the range is helping me. So anywhere in between the top range and the down range, that is where I am looking for buying opportunity. So anywhere from this area here to this, from here, and then we have, let me do from this one also. So yeah, so we're gonna put this, let's do come to the settings and style. Okay. No, exactly. So that, and we can do this. Oh, sorry. Definitely. So in this area, from the top range to the down range, that is where we're looking for what? Buying opportunities. We're looking for, be on the lookout, buying opportunities. Definitely, because we are in a bullish market. And just like it is in a bullish market, that is obviously going to be also in a bearish market. So in a bearish market now, where price is giving us, okay, where price is giving us what? Lower lows and lower highs, right? Lower low. So we have, in this situation, we have this lower low now. Price gives us this lower high, and then we have this lower low, right? So now we know that this is a lower low. What's going to be our most recent range now? So now that we have this low and we have this high. So let's just bring this up quickly, just clone this. We do have this low and we have this high. Okay, now this is going to be what? A lower high. And then this is going to be a lower low in this situation here. Exactly. So now in a bearish market, price should continue to take out the previous low and should respect, in quotes, should not close above the lower high. So price should go up, find some kind of resistance, and then sell down. So if that's the case, we now have this. Remember, the top range and the down range are drawn at the most recent swing highs and swing low. So this area here, this is a swing high, and this is the most recent swing high. So this now is going to be the top range. And this area down here is definitely going to be the down range. Definitely. So in this area is where we are looking for what? Buying opportunities. Selling now is selling. So from this swing low, yeah. So this area, oh, sorry. Let me clone that quickly. Exactly. It's this area here. We can just take this. It is in this, between this range now is where we are looking for what? Be on the lookout for, instead of buying now, because we're in a, we are in a bearish trend, we are going to be on the lookout for what? Selling opportunities. So selling, L-I-N-G, selling opportunities. You see it now? That's it. And then price will continue. Price should buy up. Okay, price should buy up. Find some kind of resistance again, sell down. So as price is selling down now, what do you think is going to happen? We have a new range. This becomes our new top range, and this becomes our new down range. Again, in this area, anywhere from this high all the way to this low, all the way from this high, this is where we're going to be looking for what? A new selling opportunity. So you're seeing it now. That is the importance of the range. You being able to spot the range will help you to just, it's going to give you a fixed area where you're going to be looking for selling opportunity. Okay, now this area here looks big. Now you might be thinking, what if I sell here? Sorry, might be thinking, what if What if I sell here and price go up? Then I sell here and price to go up. And then I sell here, that means I'm taking a loss here, I'm taking a loss here. And what if this now eventually play out? So there's still going to be more things they're going to learn that is going to help you fine tune and have a precise entry. But just know that the range helps you to box in the area where you want to look for your trade idea. Because this, we do have an invisible line here. Just assume that there is a line here and there's a line here. This has boxed in the area where you're going to be looking for trading opportunity. Just assume that there is a box line here and there's another one here. So this has boxed in the area where you want to be looking for buying opportunity. This is boxed in the area where you want to look for sell opportunity. And let's just make it look clean. Just we're going to remove that, but just have it at the back of your mind that there are these lines there. So this is it. This is a range, and that is how to draw it. So we draw the range at the most recent swing points. So we've been able to answer the range. The first thing is the trend. Remember, if the market is bullish, then that's how you know how to draw your range. If the market is bearish, then you know how to draw your range and where to draw it. So these are the two first checklists you've answered. You've been able to answer what the trend of the market is. Is it bullish? Is it bearish? And then number two is the range of the market. You've also been able to answer that and be able to draw it. Right? So you've drawn it on your charts. What next? The next thing is the Fibonacci level. I'm not going to teach that on this call. I'm going to teach it on the next. I think probably the next call. I'm going to check if Fib is the next. Okay, if Fib is not the next, then see what we can do. All right, so I'm going to take a, I mean, do this. I don't know if I should copy the link. No, let me do something like this. Okay. I'm just going to copy from here all the way down here. Okay. I'm going to capture it rather. All right, good. So now let's go to examples. I'm going to show you a couple of examples and how you could trade this just with the understanding of the trend and understanding of the range. I see. So I'm going to go straight to Euro USD. We are on the Euro USD chart already. As you can see, Euro USD daily time frame 1D. 1D is the daily time frame. I've explained this to you when we're talking about understanding trading view, right? So yes. So now I'm going to come to EU. Okay, and let's see. Now, what is the structure of EU? Just from this area here now. Looking at the structure, we can see that this was the higher high, the previous higher high, and the previous higher low, and the price give us a higher high, right? So now price is giving us a higher low, so price is likely going to give us what? A higher high. That's it, right? The market is looking bullish, right? It's higher high, higher low, higher high, higher low, higher high, higher low, higher high. This is a bullish market. As you can see, price is going to the upside. So now price is going to the upside. And this is the top range. Now, since we know the structure of the market already, that this is the higher high, the previous higher low, and the higher high, remember, when we do this, that, okay, let me remove all of this. If this is where we are presently in time, and we see this already, this is already a bullish market. Remember, the range is drawn at the most recent swing highs and the swing lows. So therefore, this is going to be our down range here. This is going to be the down range. Okay, this area here is going to be the down range. Oh no, this is the down range. And this is going to be our top range. You see it now? What this means is I'm going to be looking for buying opportunity in this area. I do not have any business looking for buying opportunities here or here or here. Anything below this down range is not an area of interest for me to look for buy opportunities anymore. You seeing it now? Exactly. This any area below here is not, I don't have any interest with that anymore. Okay, so the range is going to help me just, like I said, assume that there is a box like there's a box. So it is only in this area I'm going to be looking forward buying opportunity to take price all the way to the upside. And let us see what happens. So now we have the down range and we have the top range. And remember, in a bullish market, the best place to buy is going to be at the higher low. So just see it as this is the higher high, higher low, higher high. The best place to buy is where at the higher low, so you can take price all the way up to the higher high. Let us see where price is presently. Oh, you seeing it now? Price came down, sold down, but did not get to the high, did not get to the down range here, and then found some kind of support, and then price started to go up. Oh, okay, okay. Are you seeing it now? Right? Price found some kind of support and then went all the way to the upside. So just being able to spot the range is going to give you a very good understanding to be able to tell that price is about to start rejecting because it shouldn't get here in a bullish market. You're seeing it now? So now let's go. So now price rejected, price came down and then started to reject. Now, price came down, came to an area and then started to reject, which is a little bit too advanced now. But price came into this area here. So this is what we call the volume imbalance. I don't want, let me know. So just price came down and then started to go up. So now if we wanted to take this trade, remember price is bullish. Higher high, higher low. Let me even write it. Okay, let's write it. Higher high. We have this area as the higher low. Okay, and then price gives us this as the higher high. So we want to take a buy at where the higher low, right? That's where we want to be buying. Remember, in a bullish market, the best place to buy is at the higher low. That's it. So we want to be buying at the higher low. That's where we want to buy. And then price, remember, in a bullish market, should not come to this down range. So even if I want to take this trade, I could buy and then put my stop loss in this area. This is the safest place to put my stop loss. And you see, price did not get there. Price came to my entry at 1.06771 and then price rejected. And I'm up about, price came all the way to 330 pip. This is a 330 pip movement. You could have taken this trade with the understanding of just those two things you just learned now, the trend and the range. See it now? But then this is going to expose your account to 164 pip stop loss. That is extremely big. Having a stop loss of 164 is extremely too big. All right. So now, higher high, higher low, higher high. Price came down here and then started to reject. Let's go down now to the 1 hour, and we're going to be looking at this area. Okay, we're going to go to the 1 hour now, and let's look at this area where price rejected. So we scale down to the 1 hour. Remember, let's go back to the daily. Let me show you something. I explained to you just now that you could buy this from the daily, but then your stop loss would have been what? 164 pip. So even if you got in here, this is 162 pip, and this is a what? This is currently, it came all the way to 2.02. This means that whatever you were risking on this trade, your price came all the way up here and gave you 2 times that. And remember, your first TP, the very first place you want to be taking your profit, is 3 times what you're risking. So if you're risking 162 pip here, your TP should be all the way up here at 486 pips. That is a 1 to 3 risk reward. Remember, I taught you risk reward, and I explained to you why you should be aiming for 1 to 3. If you've not watched it, please go back to the video on risk to reward. Very important. Remember, everything I'm teaching you is all interrelated. Okay, it's all interrelated. So now, this is a 162 pip stop loss. Too big. It has not even gotten to 1 to 3 yet. And you've spent many days on this trade already. So now, how can we make it get better? Just with this knowledge of trend and range. Now we scale down to the 1 hours. And then this is that area, right? This is that area on the daily. Go down to the 1 hour now. And let me remove this now. And then let's see what is happening as price was coming down. Now, all of this price is coming down, right? Price came down. And then let's look at what happened. Now, the issue with taking entries on a lower time frame is that your account can be exposed to losses, right? Even more than the higher time frame kind of loss. What I'm saying is you could get in on a higher time frame, have your limits, and price can just activate you and go. But then if you're getting it on a very small time frames, price can decide to still be playing. And as price is playing, if you're not careful, you can be taking losses and losses and losses, right? Because you're trying to be really precise and you're trying to have the smallest stop loss possible. But then let's look at this in this case now. What was going on with price in this area? Okay, let's see. Price gave us what? Lower low. Let's look at structure now. Okay, now we're back to structure. Remember, the first thing is the trend and then the range. Now, lower low, lower high, lower low. Price gave us a lower high. Price gave us a lower low. And then price gave us what? A break of structure. Remember, break of structure that I taught you. So price broke structure here. So we're going to call this area now the break of structure. So now that price has broken structure, we should be looking to buy, right? Because in a bearish market, we have lower low, lower high, lower low, lower high, lower low. And what happened in this area? Break of structure. If I bring this down now, you can see this broke the structure up. Remember what I taught you on break of structure, right? So this is broken structure. We are looking to buy on the daily, and the 1 hour also now has broken structure to the upside. Therefore, I should be looking to buy. You know, if we had bought this, we would have taken a loss, because now remember that in after spotting the structure, the next thing is the range, right? So price is giving us lower low, lower high, lower low, lower high, lower low, and lower high. Now price has broken the structure now to the upside. Therefore, our most recent, remember, the range is drawn at the most recent high and the most recent low. So now price has broken structure. We have this area now as the higher high, because price is now bullish, right? This now becomes our new higher high. Okay, let me just remove this. And then we have this now as the last low here, which we could still call the lower low, right? Because this was the previous lower low, and then we had this at the lower high here. Now, price has broken this. Now, our most recent, because this is it, price broke structure here. So our most recent swing high and a most recent swing low will be where? Will be at this area now will be the most recent swing low. This is where my down range is going to be, right? I'm going to call this the down range, because this is the most recent, the last lower low, last swing low, and this is the most recent high. I'm not talking about this high. This is in the past. As you can see, this is go down, look down here. You're going to see Friday, May 26th. But what time? 1 p.m. This one happened when? Tuesday, May 30. That's in the future already. So this is the most recent. This is now the top range. Yeah. Okay. Now this is the most recent high and the most recent low. Remember, the range is going to help us to look for a buying opportunity now, because this market now is now what? What type of market structure is, what type of break structure is this now? I explained to you the two types of breaker structure. What type of breaker structure is this? This is the breaker structure to the upside, signifying that price is now bullish. Go back to the video again. You're going to see it. Price is broken structure to the upside. So in a bullish market now, we are expecting something like a higher low and the price will give us a higher high, right? That's what we're expecting. So if I'm going to buy this now, I could be looking to buy here, and the safest place to put my stop loss is going to be down here, and I'm aiming for what? 1, 2, 3 risk to reward. 1 to 3 up here. And then let's see what happened. You can price did not respect this. Price still decided to come down the more. Therefore, I took a loss on this trade. So I'm feeling down now. I'm sad. I took a loss. But again, remember what I taught you about risk to reward, right? This is just one trade out of many you're still going to take. So if this happened to you on Monday, remember that there is a random distribution between what? Wins and loss. You're seeing it now? So if I take one trade, in as much as I'm still within my risk, agreed risk, I can recover this trade back. So let's say, for example, now I'm risking $100 on this trade now, $100 on this trade. I just lost $100 on this trade because I hit my stop loss here. Price did not go, it did not reject like I wanted. Instead, it sold down and I had my stop loss here, and then price came down and it hit my stop loss. I've lost $100 already on this trade. I'm feeling down now. I'm just okay. Now let's see what happened. Okay, so this did not play out. Price hit the stop loss. Then what happened again? Remember, we're coming from a daily standpoint, so we believe that this is going to buy, right? Maybe it just wasn't ready yet. And then let's see again what happened, right? Now let's look at this area again now. All right, so price did not respect the structure, instead created a new lower low again. So price gave us this lower low and then gave us a lower high and then gave us a lower low. So you see it now? Lower low now. Price gave us this lower high. Okay, and then price gave us a new lower low, right? All of this is just up. This higher low, yes, from the daily time frame, right? Then what's in all of the structure inside the daily structure, right? The 1 hour now is giving us lower low, lower high. Let's remove this, and then lower low. And then what happened in this area again? We can see that price broke the structure again. Remember, consider the body of a candle. Did anybody candle close above this previous lower high? Definitely. I'm seeing this candle, this candle, this candle. This is a body candle close above. This is another break of structure again. So price broke structure again to the upside. And if we have this now, price has broken structure to the upside. Remember the trend. What is now the trend? The trend is now bullish. Therefore, I'm going to be buying in a bullish market. My down range now is going to be down here. My top range now is going to be up here again. And I have a new area where I'm looking for what? Buying opportunities. And I can say, okay, now the price is bullish, but I can say I want to buy here. I'm buying here. I want to put my stop loss at this area down here and my just put my TP at a 1 to 3, right? 1 to 3 weeks to reward. And let's see what happened, right? Price came, filled me in. Can you see? Because I understand market structure. After this higher high should give me a higher low, and then price should give me a new higher high. In as much as it did not work out here, I lost $100 on this trade. So I was down $100. This already hit 1 to 3. I'm up $300 on this trade now. And if I remove the $100 I lost, I'm still up $200. Isn't that good? Power of risk to reward. I taught you that already. And as you can see, because of the range, just your understanding of range and your understanding of the trend market structure, you can't even start to trade. It's just that you might not really be precise as to where exactly you're going to buy from. You're going to learn all those things later. So this is one example of Euro USD, how you see the importance of the range now and how it works, right? So now let me show you one more example before we call it a day. So I'm going to go to AU the chef now, and or let me use Chef JPY for you. Then let me just go down to the daily time frame, and no, not Chef JPY now. I think Card Chef rather. Exactly. So Card Chef, I remember I called out this trade in one of the trade ideas. I called out, I wanted price to buy from this imbalance. Now, how come I was so precise? How come the entry played out and price has moved? Price has moved, give or take, price has moved 1,170 pip away from where I called it out. How come? Because I understand market structure and I understand order flow. I'm going to be teaching you that later. But seeing this now, I can already see in this area that price was already giving us what? Some bullishness. Higher high, look at it. Higher high, higher low, higher high. And then I understand my range, that if I'm putting my down range here, okay, and I'm putting my top range here, I understand that this area now is where I'm going to be looking for buying opportunity. And I can decide to say, okay, guys, get in here. I called it out. This area, that let's buy from this area. And then the best place to put our stop loss where price should not get to is going to be down here. You seen it? It's going to be down here. Price should not get here. In a bullish market, remember the definition I gave you. In a bullish market, price should respect the lows and continue to take out the previous high. It did take out this high, but then it respected this low. Safest place to put your stop loss. And then this played out beautifully well. And as you can see, trade till date is still running in profit of 1,000 pip plus. Risk to reward of 1 to 11. That's it. Just understanding the trend and understanding the range, you can even catch amazing trade ideas. That's it. So if you have any question, okay, I've not showed you an example of a bearish. Let me show you a bearish example. Let me show you one. Maybe let me check if there's any on card chef, AUD USD, AUD NZD, AUD JPY. Just want to show you something simple, not too. Yes, so for AUD chef now, I can show you an example of a sell which I called out again to the downside. I saw all of this happening, all this sell. Now let's scale down to the 1 hour. I want to show you something. Let's look at the structure. Look at the structure. Let's look at the structure. Like I said, let's look at the structure. So now we can look at the structure in this area and we can see that price gave us this higher high, and then price gave us this higher low, and then price gave us this higher high. Now look at all of this area here. We can see that price did break the structure. You can see the candle close. Where's going to be our range now? This is going to be our top range here. Going to have a top range here, and we're going to have this top range, and we're going to have this area, which is the lowest low here, as the down range. And so we are looking for sell opportunities anywhere in between this area. And as you can see, this area here, price did come up here, and then price showed all the way to the downside here. So you could have taken a sell from this area, and then you could have come out, like take your profit from here. Just understanding the trend and the range. And also very importantly, you being able to understand the market transition phase, which is the break of structure that can help you to get in on trades really, really early. That's it. So that's going to be the end of this call. If you have any question, please feel free to go to the question group and drop it there, or you can send it to me directly. I know these things might be new to some of you, so please just try and watch the video again, over and over and over again until you get it. Right. And then when you finish watching the example, when you finish watching the video, you go to the charts and you look for these things. Right. So that reminds me, I'm going to give you an homework exercise now. So the homework exercise is you're going to help me to, number one, identify three examples of market bullish range and three examples of a market a bearish range. So the first thing you need to do is be able to spot the structure. If it's bullish, higher highs and higher lows, and then draw the range on three different assets. And then for the sell, three different asset also. Okay, so that's 6 charts I'm expecting from you. Right, so let me quickly write it here. So homework exercise. Identify three examples each for the following. Number one, bullish trend and range. Number two, bearish trend and range. So what I'm saying is, what this assignment is, for example, you open up maybe an assets, maybe Euro JPY, look for the structure, bullish, higher highs, higher lows, draw the range. That's one. Then look for another asset. If it's bearish, put in the annotations, lower lows and lower highs, put the range that you sent to me. All right, so I'm expecting 6 homework from you, like 6 homework exercise from you. All right, so if you have any question, please feel free to ask me. Do have an amazing day. Bye-bye.